Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. If you'd like to get a pair of free deerskin work gloves, send an email to marketing@axontire.com and tell them the Moving Iron Podcast sent you, and they will send you a free deerskin glove. Not the deer that I shot. It's not the same deerskin, but it's it's pretty close to the same. So check that out. If you're interested in doing that, send an email to marketing@axontire.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom has access to over $20 billion in heavy equipment sales data. Tractor Zoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. This podcast is also brought to you by Axon. I did that one. This is brought to you by Anvil AppWorks. Their Dealer Connect CRMI app with integrated inventory management is an affordable Salesforce-based solution for your dealership. Help connect your customers' experience and transform how you work today. Shawn is with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the marketplace. So, Shawn, how you doing this morning?
I'm good, real good. It's the fall weather's coming here in South Florida.
Mm-hmm. Something like that. Some people call it fall, some people call it summer. Whatever, it's the same difference. It's all relative, right, Shawn?
It's all relative, but we are finally getting in the 70s, which we haven't seen in 7 months. So for us, that's time to click our heels and be thankful. So,
break out the parkas, fellas. It's getting ready to get cold.
That's right.
All right, Shawn, lots of stuff going on as usual. Interesting report came out last night, and I was reading through some notes and stuff and kind of seeing what was going on in the marketplace. The UN came out and said, hey, guess what? Food prices declined for the 6th straight month in a row. I guess I haven't noticed that decline in food prices, but somebody has. So I guess input costs and those kind of things, we've talked about those things leading up that we're seeing where the market's at right now. The market had a pretty big dip pretty much the summer months, kind of dropped off from where it was in the spring. But now we're seeing it come back up. Some of these food prices probably are, some contracts and stuff that they bought during that dip. We're seeing that response now come back out. But, moving forward, Shawn, it looks like to me food prices are going to be, we might see a bit of a reprieve here, but, looking at the way things are and inflation the way it is, I don't really see a big movement in food prices. Do you?
Well, as long as the Fed continues to raise interest, we just got the jobs report out this morning, and they were according to the media, they were stronger than expected. The dollar is strong. Everyone's expecting them to keep cranking up the interest rates and pulling the money supply. So long as you're in that mode, it's going to be very hard for any commodity to sustain a rally beyond, like we've seen in grains where they had this,
Sure.
But I don't see them really being able to counteract that very, very deflationary force of lower liquidity and higher interest rates.
Right.
And if we get improved weather as we get into 2023 with El Nino, means bigger crops. So overall, we topped out in February when Russia invaded Ukraine, and overall, all commodities, including agricultural prices as a whole, have been down. And so we're starting to see those lower prices filter in, still dramatically higher from what we've been accustomed to. But, relative to where things are improving on that front, and they're probably going to continue to improve unless there's some new catalyst that comes along to change the Fed's trajectory, or something else comes along that overrides the Fed's trajectory. And for now, I think, as we've discussed, I think the grain markets have kind of topped out here. And we kind of think we're rolling over. Harvest is really cranking now. New supplies are coming in. Not really anything to worry about in South America until at least December weather-wise. So it just looks to me like we're going to be in some kind of corrective mode here for the next 30 or 45 days. So,
yeah, and there another article I was going to bring up too, and you kind of hit on it there, was the Minneapolis Fed president, Neil Shikari. I don't know if that's how you say the last name, but anyway, almost no evidence inflation's coming down anytime soon. So you can quote me on that, sir. That's kind of what they said. So there's a long road to go here.
Well, Well, remember, inflation is
standpoint.
not just commodities.
Right. It's everything. Yeah.
There's commodity inflation. There's health cost inflation.
Sure.
There's wage inflation. I deal with, my focus is commodity inflation. Now, we had commodity inflation like crazy in the 2000s, but we didn't have overall high inflation because the other components were kept at bay. What's different this time is that we have all pillars of inflation running at the same time. So I guess what I'm focusing on is I think that the commodity inflation that we had been seeing, which is a component of overall inflation, is coming down. But is that going to override wage inflation, health cost inflation, and transportation inflation and logistical inflation? Not necessarily, but it will help a little bit. I'm saying it will help a little bit.
Right on. So throw a little gas on the fire. I'm assuming this would throw gas on the fire. The FAO lowers global cereal grain production forecasts, cut the 2022 to 2023 global cereal grain production to 2.768 billion metric tons, down from 5.9 million metric tons. So my math, and I'm an equipment guy, not a mathematician. So
yeah.
I forget to carry the one sometimes. So if you look at that, that's about half of where production actually used to be. So that's going to be a big deal when you look at the overall outcome of how the world, especially when you're throwing that in, when you're looking at Ukraine, which I'm sure that's a lot of that. If you look at the Russia-Ukraine situation, there's a lot of talk of famine in the world. And we've talked about on here quite a bit, and what that looks like going into 23, especially with world ending stocks and those kind of things. I guess, what's your thought on 23 in grain prices? Are you still as bullish as you have been, or are you starting to temper that a little bit based on maybe some of these grains getting out of Russia and out of Ukraine?
Well, I mean, we made our first cash sell recommendation in grains in May. Mm-hmm. And then we made our second cash sell recommendation here in the last couple of weeks. We do think we're, looking less favorable. We mentioned at your summit, we're less favorable prices heading into 23 because, we are seeing some demand come down. We always do. Ethanol demand is coming down. When we have all the animal feeding units for feed. We know Europe had mass herd liquidation due to drought. We know the U.S. has had mass herd liquidation due to drought. We know that China's had mass herd liquidation due to poor economics and African swine fever. So when we look at the amount of animals that are going to need to be fed, it's just not there. So feed demand is going to be down. Ethanol demand is going to be, corn-based ethanol demand is going to be down. And when we look at the current demand, if we looked at the exports for corn, for example, they're way, way below where they need to be to meet the current USDA expectations on demand. So there's always two phases, right? The first phase is there's no supply. The market got it wrong, and then they have to dramatically reduce the balance sheet. And then the market always is sticky and they always think demand's going to stay the same, whether it's $8 corn or $4 corn. We know that's not true. So demand's too high. The demand's going to have to come down, which means these ending stocks that look historically unbearably tight will loosen up some. And if we have better weather, which we strongly believe we're going to have, El Nino kind of weather, more moisture, cooler temperatures, record yields, we're going to be building ending stocks in the next 12 months. And that means, we can argue where the price should go. Is it 5.5? Is it 4.5? Is it 6? Lots of factors go into exactly where it winds up, but it's hard for us to see significant upside in grain markets with that outlook unless there's something new that comes along to tip the scales, some escalation, geopolitical escalation, some significant rule change by some government somewhere. I don't know. But right now, we're definitely feeling defensive, and we think we're in a period of pause. Now, it doesn't change the long-term inflationary picture for agricultural food prices, but we're in a pause period that we think has further to go before we reach what we think would be the next important low and bullish turning point sometime next spring, summer of 2023.
Gotcha. Okay. Now, let's talk about the protein markets real quick and where those stand. Still a lot of herd liquidation going on. You're seeing that kind of stuff. We're seeing some rains getting to the western part of the United States. We're starting to see that kind of develop. I saw an article the other day. They were talking about a storm coming out of Alaska that was going to affect the West Coast pretty significantly in some places where it could be flash flooding and those kind of things. So there's that going on. When you look at what's going on with cattle prices, you've been bullish going into this time. Like you talked about some bullish time frames going into the spring and then kind of a reassessment point at that point. Shawn, talk a little bit about what you see happening in the cattle market and then what you see happening on the hog side, because the hogs get beat in the head one week and the next week they get it all back and they get beat in the head again. So I guess talk about that a little bit.
Where I think we are right now with hogs and cattle is that we have an air pocket in demand right now. We've been seeing a correction in both. It's kind of like what happened to the milk market over the summer. We had this big correction on this hole in demand, and now we're seeing milk prices stabilize and starting to work higher. I don't think we're done with livestock yet in terms of cattle and hogs with this hole in demand. I think we have a little further to go, maybe another 30 days, maybe another 45 days. But think of it that what's bad for grains in the next 12 months is good for livestock. If the feed price comes down, if we get the rains out west, if we get the pasture growth going, if we get the alfalfa and the hay production going and we get cheaper feed, then the herd liquidation stops. And everyone says, you know what? Boy, this, these feed prices, this works pretty well with the current price that we have. We're going to start rebuilding the hog herd and the cattle herd, retain those animals, get reproduction going. And that means less animals coming to the packing houses, coming to the market. That's the scenario for late this year, into, let's say, summer, fall of 2023. So if you think about 2013, 14, the grains came down like this and the livestock sector went up like this. We kind of, and that's kind of what we think is set up here is a good period for livestock producers and, kind of a give back here for the grain producers at this point. And that's kind of normal. That's kind of normal when you enter herd liquidation cycle. It's not. Now remember, feed demand is going to be down, but if you start to rebuild the herds, especially for the hogs, back half of 2023, feed demand for hogs globally is going to start to improve. China's going to be rebuilding. We're going to rebuild. It takes a little longer to get the cattle thing going. That'll be a feed demand increase for 24. But if you think this through, if we get to the 1 in 100 year drought cycle in 24, 25, and we get the feed demand situation going, and we have very low prices, you could see where there could be a really interesting feed buying opportunity.
Right.
Spring, summer of 23, kind of like what we saw in 2020. So we're kind of gearing our customers up for that window of opportunity to get feed bought for 1 to 2 years. In the meantime, if I'm a grain producer right now, I want to be cash selling rallies. I want to be looking for opportunities to keep protecting my downside price risks. You've had a good run. Prices are healthy. But you don't want to be sitting trying to sell $5.50 to $4.50 corn next spring or summer. Because remember, what happens is the corn price comes down, Casey, but the inputs are sticky. They don't come down right away. So you get the lower corn price, but your fertilizer doesn't quite come down yet. And the seed price doesn't quite come down yet. And your cash rents don't quite come down yet. And so if you don't get them priced now when the beginning is good, you're upside down, losing money all of a sudden when you should be making money. And I'm trying to avoid that for our customers and for anyone involved in the ag business on the production side of grains. Just don't be that person that's selling $5 corn, but the fertilizer is still too high. Now, the following year, all the inputs come down.
Right.
And then, while the corn price goes up, and then you have the ability to lock in the inputs, but keep your top side open. And that's the game when it deals with cash grain marketing. You always have to lock in your inputs at a different time than you lock in your corn, soybean price, or wheat price. Very rarely do you ever get an opportunity to lock both in at the same time and really get a good margin. You have to be proactive on both sides. Right now, the opportunity is to get your cash grain sold and wait to buy the inputs at a later date when they start coming down.
Right. Yep. Good stuff. All right, Shawn. Good stuff as usual, man. Folks want to reach out to you and get more information about what it is you're doing over at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. Lots of information on there to tell people, inform people more about how we do things, our weather algorithm and such, to see if what we do may be of some value to anyone involved in the ag space.
Go check that out. Lots of good information there for free that you can check that out and get a lot of good information headed your way. And Shawn does a great job with his newsletters and stuff like that he puts out on the subscription side of things. So, Shawn, appreciate you being on the podcast, man.
Thanks, Casey. Keep up your good work, and I look forward to continuing on as we go through this amazing decade ahead for agriculture.
Yeah. It's going to be a fun ride. Maybe rough a few times, but it'll be fun nonetheless. So, I am Casey Seymour with Moving Iron Podcast. Make sure to check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. See me on LinkedIn at Moving Iron Podcast and the ever so cleverly named Moving Iron Podcast YouTube channel, where you can find the video version of this very podcast there. So more information about the Moving Iron Summit, it will be listed on the MovingIronLLC.com website, where you can find all the information about anything Moving Iron related. The Moving Iron Summit is September 11th through the 13th at the downtown Hilton there in Nashville, Tennessee in 23. If you're interested in doing that, Axon Tire has been nice enough to give you guys $50 off of your registration for the first 150 people that sign up. So if you're interested in doing that, make sure you get that done, and we'll go from there. More information will be posted there in a manner. So we're just working through a few details here with myself and my planning committee. So with that, I am Casey Seymour with Shawn Hackett, Smooth Smart folks. Out.
Moving iron in the 21st century.